Fed Day, Warriors. How's everyone doing today? Okay, so this is when you plan. Born ready. How about you, Ute? Everything I've done my whole life has prepared me for the Fed Day today. Anyway, prudence before valor. Okay, I'm looking at the S&Ps here. Good, Hamid, how are you? And, you know, the market could be disappointed. DJ, how are you? A quarter point, I think, is everyone's expecting it. Okay, so really, it's probably going to be the press conference and not the initial announcement that if we're going to get some jet fuel for new highs in the S&Ps. I think that's what it's going to. Is it better now, Joe? Am I still low? Volume okay, Face? Okay. So we'll see how much it's really going to depend on the statement, the press conference, which I'm not 100% sure. I would guess with such an important day, there's going to be a press conference. So we'll see. But you know, here again, what I talked about yesterday, everyone's looking for this short after the Fed. They've been waiting for this for weeks, and 30, 40, 30, 50. You could see how just a measured move could get you there, right? Just look at this range. Just in ballpark round numbers, 3,000 to 30.25. We break out over these highs. You tack on 25, it gives you 30.50. So you could see how technically that could be achieved just by looking at this range here, right? And, you know, here we just, you know, looked for stops, and this was on a Friday, and all week, even though the market knows the Fed's going to do something, those pretty good selling pressure because of earnings. We bounced back. I would just say that if I was going to, someone put a gun to my head, I'd probably want to be short S&Ps prior to the Fed or right after the Fed. And I think that there's a chance that we're not going to take out these highs. You know, if you want to do that, you have to get out of the way into new highs. But why can't we be topping? And if we take out this low, just like we could get to 30.50 on the upside, if we take out 3,000, then we're headed to 29.70. Okay, and that would change the picture technically on a lot of different TFs time frames. Okay, so looking at the dollar, you know, there's some divergence here. I can't get short, but look at how we're not confirming here. I know a lot of, I think Andre had 98.40 for one harmonic target. There are much higher targets above, but you know, we could get a little bit of a shakeout on just a quarter. I have a hard time with as crowded as DSI is showing the dollar doing it here. Here it was okay. This was the ECB because you had it checking the breakout, but up here, I can't do it for, you know, maybe 40 pips. So I think there could be a lot of fades after this. A couple of features that, you know, I missed this. I was staring at this on this candle right here, Aussie Kiwi. And I said, well, just be disciplined, Dale, and wait till tomorrow. Then later in the evening, I saw this. But we didn't get to the 78.6. And what held me back from this buy, and, you know, woulda, coulda, shoulda, toe in the water, even though it wasn't what I was looking for, because I thought we'd get down to 103.72, is that we didn't even take out the low. This low was 103.86, and this was 86. So I thought I'd wait and see if they take out the stops and have divergence, but very good possibility that this is bottomed. Okay, and maybe we just get a pullback. I'd buy pullbacks if you have an opportunity to do it, and see how we finish on the day, maybe around 104.20, 104.10 on some type of pullback. And the other thing that looks different than what we've been seeing, and I talked about that we should see a correction in the gold silver ratio yesterday. Well, you're seeing it. Try and remember, since the bull run started in silver, a day where you would see silver way underperforming, down 11 cents, compared to gold was just higher a few minutes ago and it's only down 30 cents and looking better. And when I look at the silver here, and Blake and I were talking about it yesterday, is that if we get one more high in silver after the Fed, and we just take out this high, you can see that we diverged on this high up here and under 70, which is ideal. So if we make a new high up here in silver today after the Fed, and the RSI records a reading 70 or lower, you could have some type of 3-drive formation here, and I would take a shot. So I'm looking at that. Gold, much further away from that, a 3-drive. We're, $25 away from this high. So we'll see what happens up here. If the gold silver ratio is correcting and it has more to go, silver is going to be my preferred short. Okay. And not like I'm looking for a bear market, but we've had one heck of a run. I don't know but you get some type of fib retracement from 1460. That's $2. Why can't we pull back to 1560, which is a breakout? That's $1. So that would be a big trade for me. I don't know about you, but that would be a big trade. Probably have a hard time sticking around for it. But that's what I'm looking to do. So I have really nothing on. I mean, positions. I'm dressed to do this, but I have no positions on. Not that I have nothing on. I want to gross you guys out about that anyway. I don't trade naked. All right. And if I did trade naked, I would make sure I had window shades drawn. Okay. So the only exhibitionist in me is my ego when it comes to the markets. Okay. So a few ideas for you to consider. Also, you want to keep monitoring this US dollar yuan. Okay. So maybe what would be constructive for the market and risk would be for this to come off one more time. Because if we start cracking the 695 level, a lot of people are saying, 720's a gimme, but when I look at it and I measure it from here, no one's talking about 760 on the yuan. And that would be the measured move of this. If we crack the high here, that we could get something like this added onto a breakout. So that would be pretty bearish gold. Okay, when the yuan's heading lower, which means this is going higher, it's usually negative gold. And lastly, I just want to look at the yen here. I really respect Paulie's view, and I know he was talking about maybe getting some shorts off here in the yen after the number. And I could actually make a case that if we had a rally up towards some of Paulie's numbers on his bias chart, which I think Blake showed yesterday, I think Paulie's going to join us today. So I'll get to see his numbers. You have to see Paulie's numbers. And the best way to see Paulie's numbers is to do this. Sign up and get the edge before the US opens. Okay, Amanda's on TV. What are you in a soap opera, Amanda? Oh, you're in the TV. Oh, okay. So you stuck your head inside the console and you're on TV. You belong on TV. People have said, Dale, you have the perfect face for radio. So you want to join You want to be on our team, with our team. Look at this. They used to talk about the New York Yankees. Look at that. Look at all these great traders. Look at this education site, which you can actually get for free. You don't have to join. Okay, where you can learn all these things. But the key is the analysis. And Blake was going over when the bias charts were being shown yesterday, that when you go to your you have a bias chart or a journal, and you could comp your levels with the team's levels for both support and resistance. I figured it would probably be light positions for the team into okay, Celio's taking a shot up there. Technically, I think there'll be a pullback, but I've seen so many things that, based upon my RSI work, I wouldn't do that Stelios does. And he has one of the highest hit rates of the team. I think he has the highest hit rate. It's in the 80s. Okay. So, Paul today. Okay. Paul today, Grega tomorrow. So Paul will be with us in a little bit. And guys, there's no law against having more than one account. And come on, I know everyone bitches about their broker from time to time. So why not have a backup horse to ride? And Justin and Trent will help you find the right place for you to get paid as well. Or if you're overseas, you could use it for your subscription. So here's our pricing. So tier one's going to cost you 10 pips a month. This is 11. This is 11. Oh, and this is almost 12 pips a month. So if you're taking risk, this is what I have to say, especially if you're, have only been doing it a few years. You can pay the market, or you could pay for good research to help you out. Most people have to pay both. And it's my belief that if you join us, even though you may still take losses, that it will be a community college tuition rather than one at Harvard or Ivy League. So sign up, join us. You have Amanda, who's kept people bearish cable all the way down in our members chat. All right. I mean, the team is great and they're all for you. We don't just root for you, we help you. So that's a wrap for me this morning. I want to wish everyone good luck. It's okay to do nothing. Okay, no FOMO today. It's okay to do nothing. It's not illegal to sit on your hands, because after today, then we're faced with another red number on Friday. So if you're positioning yourself today after the Fed and it's working for you, you're going to want to clean it up a little bit before the release on Friday. Everyone with me? So nimble, guerrilla warrior until we get through this week. And then you could start thinking more in swing and position terms again. And I think that we're going to have some resolution to things that have been unresolved for a long time today, or else I'm completely wet and it'll be a non-event, but I don't think so. So my main thing is I think there's a possibility. Everyone thinks the market's going to make a new high. S&Ps are going to make a new high. It's going to be a layup short at 30.40, 30.50. I'm skeptical it's going to be that easy. Any questions for me before I think it's Blake and then Paulie. Anything? Okay, so good hunting and good luck reacting to the reaction. Think about the metals at new highs and so forth, and S&Ps, maybe, if you see them fail and you're not there right away, if you miss the initial wave of anything that's happening here, right, it doesn't mean that you missed the whole move, because it could just be beginning. Okay, you don't have to be short at the top or long from the low to be successful from this business. There's always reactions and retracements to finesse an entry for you. Okay? All right, everyone. So good luck today. Blake, what do you think? Quarter baked in, market won't be impressed until maybe Jay Powell talks about maybe another couple after this. What are your thoughts going into it, bro?
Well, first and foremost, the ADP numbers just came in at 156K, and the market didn't move. The market was looking for 150,000.
Okay, yeah.
So just it was just it's a non-event, and I mean, really, like nothing happened. Everybody's waiting for FOMC.
Good guess by ADP.
Yeah, it was
Great forecast.
Exactly.
How do you make money on that?
You don't. So let's talk about what you're saying here, and a quarter basis point is obviously baked in. A lot of people are, wondering the whys, why is the Fed actually cutting rates, or what do they see? Is it something that they're seeing that we're not seeing? And this has been the question in the last couple of Fed meetings. I was reading a Goldman Sachs piece yesterday talking about the possibility of a half a basis point one and done situation, and the Fed could quantify that as more of a positioning, as recalibrating type of situation, which is possible. It's possible that the Fed, lowers by a half basis point. Says basically it's a one and done. That's it. And then we're going to, assess the risk from here once we make this a one-time adjustment. And I think that there's a good chance of that happening. The market says there's a 18% chance of that happening. If you look at, hold on, let me pull it up for you really quick.
I saw some of the reasons people were giving. One was like what I was thinking: the yield curve, their fear of the yield curve. Political pressure. I forgot what the other ones were.
Yeah, I mean, I think a lot of political pressure has to do with it, believe it or not. And here's just so you can see, this is the 18% chance.
Oh, okay.
This is the probabilities of a half a basis point, 82% chance of a quarter basis point today. But I think, hold on really quick. Sorry, I was just responding to Greg. Greg is going to come in tomorrow to say hello to everybody. But the fact is, I want you guys all to know that there is a risk that they
one and done.
One and done.
Doesn't that box them in if they need to do more?
No, I mean, if they say that we're going to, it's now it's more of a just we're going to be assessing the global economy from here, or the economy from here, or the factors from here, and but it would signal to the market that it's a one and done if they did a half a basis point, just to using the Goldman Sachs term, recalibrate.
Okay.
But let's imagine what the risks of that would be, right? If it was a half a basis point, you know what would happen to stocks immediately?
Yeah. They'd blow.
They'd blow higher.
Yeah.
They would, half a basis point, we would see a rally in the S&P probably to that 30-40 level that you're talking about.
Yeah.
The 120
200.
I don't know about that, but I think that
guys are looking for that.
But not in one day.
Oh no,
I don't. No. But I think we could do this. We could rally and then reverse.
Yeah.
Right.
Yeah.
I think that's entirely possible with that type of situation. Would Would it be crazy for that to happen? No, I mean, and then, but you'd watch the knee-jerk reaction in the dollar too. The dollar would probably push the euro on a half a basis point. We would do this. We would go through 111, take out the stops, and probably reverse, right? So, we have to prepare for that situation. Do I think that that's a realistic expectation? No, I don't. I think we're going to do a half a basis point, and the Fed's going to prepare the market for another, or excuse me, a quarter basis point, prepare the market for another 2 cuts for the remainder of the year. I mean, I think that's the base case, and I think that's the realistic case. And do I think that that is something that the market needs? I don't think so. I think the Fed is actually playing into Trump's pressures, and I think it's going to continue to keep stocks elevated. But the problem that they're going to have with this, the stock market being elevated, is you're probably going to have a dollar that continues to stay elevated, and so this is a situation where Trump is not going to be able to get have his cake and eat it too. He's going to get a stronger stock market, and probably a stronger dollar at the same time, so, and he might continue to complain that the Fed's not being aggressive enough.
Yeah, he doesn't want a stronger dollar. Yeah.
But in this case, I don't think you're going to get both. I don't think it's going to be, a situation where you get both. So
what would happen to the dollar if Bernie Sanders is our next president, or Joe Biden? You think it would keep rallying?
We would sell off probably very aggressively.
We got to wait another year and a half for a bear market in the dollar.
Okay. My God, you might have to. Who knows? But, I'm sorry. I didn't
sorry
to
to
on
bore
today.
you.
No, I'm just, I didn't sleep well. It's hot here, and even though I turned the air conditioning down. I don't turn it down into the 60s. Obviously, it's it's like it's to cool my house would my AC units would blow up, but it's hot and muggy here because we're in monsoon season, so I'm not sleeping well. It's definitely affecting my sleep. It took me 2 hours to fall asleep last night, and when you only sleep 6 hours a night, it's it is wearing on me this morning. But I do want to go through the majors, which we did yesterday, and we're going to go through the bias chart again today, ahead of the FOMC. Paul Franco is going to be joining us in about 30 minutes. He's going to join us the last 10 minutes just to give you his take on what he's seeing ahead of the FOMC. Greg is going to be joining us on Thursday, and Andre is going to join us on Friday. So you guys are going to have some visitors the next couple of days with in regards to the face webinar. So on these time slots, that's on top of the wonderful interviews that Dale brings around. So let's talk about the euro dollar, okay? And real quick, let me see here. I got to type something real quick. Okay. All right. Sorry about that, guys. I had to type just a couple of things. So let's talk about the majors. And we know based on yesterday's conversation, the euro dollar isn't range bound, and nothing changed overnight. So realize that we are stuck in a 111. Well, we spiked down to 111 in the figure, but 111.10. I'm just going to write down 111 is support. Okay. and 111.80 is resistance. This is the same as yesterday, so nothing new here. We are in a range, and you can see this is the range that is very much being respected. And I think you have to even be careful in the event that the euro dollar starts to spike higher. As we go into 111.80, you got to realize that 112 is also going to offer resistance, as that is previous channel resistance. It is also previous support here. So you're going to find some resistance from 111.80 all the way up to 112. Okay. So I'm going to write down 112 will be the resistance as well. And I'm going to put an asterisk there because I think those are both very important. All right, let's go over to the cable. And by the way, I'm going to be working through these numbers pretty quick. Yesterday I gave you a little bit more of a flavor on our process, on my process, on how I go about getting these numbers. But since we're going to have Paul Franco coming in to join us today to give his thoughts on some of the things that he's seeing, it's always better to get multiple eyes on the markets, not just my eye or Dale's eye. Let's get as many people in here as possible. So I want to bring in Paul Franco the last 10 minutes so he can kind of show you what he's seeing. But to do that, I'm also going to make sure that I get these numbers to you. So and I showed you yesterday how I work through those numbers a little bit more so than today, than I will today. So support in the cable, same. And what you'll notice, if you took a picture of yesterday's bias chart that I did for you, today is going to be almost the same. And I don't keep them. I just pull up these same numbers. I just pull up the same numbers as I just pull up the same numbers based on my analysis. But you'll notice that those numbers stay pretty close to the same unless we have big sweeping moves in the market. So yesterday, we talked about the 127% extension of this move right here. It comes in at 121, the figure, and I said yesterday, if we came down and broke into new lows, I would actually be interested in buying the cable. It didn't happen. Yesterday, I was hoping it would. It did not happen. But today, I don't know if I really want to trade the cable on the long side, but I was willing to do it yesterday. Today, we'll see what happens. So as far as resistance goes, let's talk about where some resistance in the cable might be. So what I'll do is I'm going to take a fib of this last big leg lower, and I'm going to look at like a 38% retracement and just kind of see where that's at. So you'll notice that on this 4-hour candle, move this over here, this 4-hour candle, we had a spike high on that 4-hour candle right at the 38% retracement of this move, which comes in at 122.70. So I think minor resistance today on any rally, because you have to imagine that the dollar could weaken, if the Fed is, just does a one and done type of thing, but maybe it's just a quarter basis point and the dollar, really comes under some pressure. So 122.70, I think, is going to be minor resistance. We are still in a bearish trend, just like we were yesterday. All right, let's go take a look at the Aussie. Here's the Aussie dollar. Okay, so the Aussie, we hit the 127% extension that we talked about yesterday. I actually tweeted this chart yesterday. I picked up the Aussie yesterday. Paul Franco was with me. I think he picked up some too yesterday afternoon. It was kind of late in the day. A lot of traders that have already gone, but I picked up the Aussie at 70. I just sold it this morning at 95, 94. So, I made a little bit of money, but, and it did actually move lower, before the Australian CPI numbers came out. Then the CPI numbers came out, the Aussie ripped higher, and, here we are, now we're just kind of, sitting here, waiting for the FOMC. But what that does is that really signals to me that this low was very important. So this low comes in at, the overnight low is 68.62, but 68.55 is 127% extension. You have the 88% retracement right there. So we're going to write down, I'll just keep it an even number. So, by the way, we just had some Canadian data come out. Crap, I forgot that we had data coming out today. Sorry, let's go over to the calendar. Oh, crap. So the Canadian number came in pretty strong, and that's pushing the US dollar Canadian down. You can see the US dollar Canadian's coming under a little bit of pressure here. So it was a stronger GDP number, and that's what pushed that dollar Canadian down. Let's see, the ECI employment cost index that's pretty weak, and so you have the euro. Probably it didn't really react though. It's bouncing a little bit, but this is really pushed the dollar Canadian lower with a stronger GDP number though. All right, something just to keep in mind. All right, let's go back to what I was saying here. Okay, so the Aussie support is going to be 68.65. Okay, that's going to be key. Damn it. Okay, resistance now for the Aussie. Now we popped out of this this channel, but really we have to get back above 69.10 in order for you know, the pair to turn bullish. So 69.10, or to have a recovery.
Was that an
potential.
RBA move last night? That spike, that big candle?
It was CPI. It was CPI.
Okay. Okay.
69.10. That's resistance. Remember, like I said yesterday, we are range bound. I know it's been a pretty bearish move over the last couple weeks, but it's really more of a range. We're just at the lower end of the range at the moment.
Yeah, third time in this range.
Yeah. So, and what you missed a little bit earlier, Dale, I did pick up the Aussie late in the day yesterday with Paul Franco at like 70. Sold it this morning in 95 or 94, and I'm just kind of sitting here, just kind of waiting. Let's talk about the Kiwi. So the Kiwi came under a little bit of pressure last night in Asia. New Zealand, Australia, New Zealand business confidence was a little weak. We spiked down, came back up. We're trying to hold the 618, but I mean, frankly, I guess I look at the Kiwi and I think we just got to focus on that level right there. It comes in at 65.70.
Well, if Aussie Kiwi turned on that last night, Blake, your preferred long is the one you're long.
Yeah, right, exactly. Now the Kiwi, any type of resistance is going to be right back up here, and I think we wrote down yesterday, and it's going to be the same. It's going to be 66.40. You can see some spike highs up here. So 66.40 will be resistance. We are in a range. Okay. And let's take a look at the dollar Canadian. Now the GDP numbers for the dollar Canadian came in, for Canada came in a little stronger than expected. But remember, we are still the same range that we were dealing with yesterday. We're dealing with it today. So 131.15. If you guys feel there's any type of risk of the dollar strengthening today, if we get a little bit of risk off, the dollar Canadian may be a good long. Now, listen to me really quick or hear me out when I say this. That was a strong Canadian GDP number. Came in a little stronger than expected. Inflation data was a little weak, but that's all right. That's what pushed the dollar Canadian lower. There's going to be a lot of traders that actually bought the Canadian on that number. So in the event that the dollar actually strengthens following today, traders are going to get wrong-footed here, in my opinion. So a break above 132 is going to be very important, in my opinion. 132, and then support probably same as yesterday. 131.15. I think what we wrote down, but I can't remember specifically what numbers were what. Some of you already probably took a picture yesterday, which those of you that are longtime listeners of my webinars over the last 15 years probably took those pictures of the bias chart. Once again, I just can't remember exactly what number we had. Let's go over to the Swissy. So the Swissy's next. Same range that we were dealing with yesterday. And remember, a move down to here is a retest of not only this, previous resistance, which should act as current support, it's also that broken trend line. So that support comes in at 98.75. 98.75. Resistance is right here. Obviously, it's same as resistance over here, is 99.50. I know that the spike high is 45 over here, but it's the resistance up here that's more important. So 99.50. You're in a range. Let's take a look at the dollar yen. Dollar yen. I haven't been doing anything with the dollar yen except, the day before yesterday or yesterday, day before yesterday, I shorted it at like 108. My average was 108, like, I don't know, 80 something. And then I closed it yesterday, not for much. I closed it yesterday in the 50s somewhere. And I just have been leaving it alone. And 109 to 108.40. That's it. I mean, this is our range. This is the range that we're dealing with today. Now, here's the thing about the dollar yen. I know a lot of traders are going to be trading the dollar yen based off of, what the FOMC does. But what's more important in the dollar yen, in my opinion, is more risk on, risk off. So before getting too committed one direction or the other in the US dollar, Japanese yen, make sure you're watching, what the stock market's doing. Obviously, if stocks are moving higher, the dollar yen tends to be more of a buy. Stocks are moving lower, tends to be a short. So 108.40 and 109, those are the levels that and remember that there's a 38% retracement. This is really key. Let me grab the fib. You see this fib right here? Okay.
Yeah.
That 38% retracement comes in at 109, so or 108.90, but just 109 is just going to be very significant once again, because that's where we stopped before. So 109, 108.40, 108.40, and 109, and that's going to be a key resistance, and we are in a range still. All right, let's take a look at the Dixie. Here's the dollar index. Here's the dollar index. Okay, so with the dollar index, we have, we're stalling here, but obvious resistance comes in at 98.35. That's the obvious. That's the 98.35 key resistance is a big deal. All right. So remember, I chose yesterday not to put bullish. I put range because even though this has been a nice move higher, we have to keep in mind we've been pretty much range bound for the last year. I mean, 2019, yeah, we're testing those highs of the year or close to, but really it's been more of a range. We're just at the upper end of the range. Now breakout's going to be obviously pretty bullish here. That would be my view. I think there's a lot of us, myself included, that didn't expect the dollar to hit new highs. So and I'm talking like, several months ago when it looked like we're doing a double top and looked like the dollar was going to, turn lower. I'm like, man, we're not going to revisit these levels. And here we are. And now that we're up here, a breakout would obviously be very bullish. So that's why I think you have to be cognizant of this, resistance if we do break. Now support, it's a tough call. I mean, I would say that it's probably this support zone that's right here, because you got, spike high, spike high, spike high, spike high. You can see it acted as a lot of resistance up here. This support down here was the bottom of the support zone. So 98.80. It's going to be good support on dips in the dollar index, or 97.80. Excuse me, 97.80. All right. Let's go over to the peso really quick. The dollar peso is under some pressure. We had Mexican GDP came in a little better than expected. I bought the dollar Mexican peso down here yesterday. When if you guys remember, I added to my position down here yesterday, and then I sold it when we were at 909, somewhere up here. I actually took it off right near the highs. Wait,
Why didn't you
yesterday,
reverse, man? I'm kidding.
yesterday it would have been right here. So no, because I know we went up to it went up to 1912 yesterday, and you asked me why I didn't reverse, because I am not a good bi-directional trader. I'm a good directional trader. I'm
Yeah.
not a good bi-directional trader. There are some people that are really good in flip-flopping their direction.
Yeah.
I'm not, and that's
Know thyself.
yeah. Well, it's know thyself, and then plus I tend to be more of a biased trader, meaning that if I'm bullish the euro, I tend to be just trading the euro on the long side. Doesn't mean that it's going to go up all the time. It just, I tend to buy dips and yada yada, and or vice versa. It's not. I have a hard time going two directions.
It's hard to turn and go the other way.
It is because I tend to have a macro view of the market.
Yeah. I was just kidding.
But a lot of traders that are just technical traders, they tend to, be a little bit better at trading both directions. But once they become a little bit more experienced in the market, meaning that they start to understand the reasons why the market is moving the way it's moving, I think it's common to be not as good as a bi-directional trader at that point in time, because you tend to have a point of view, and that usually comes with experience. So, those people that are always, whipping back and forth, they're either completely oblivious in the reasons why things are moving, typically, or they say, well, I don't care. But usually people that say, well, I don't care why the market's doing what it's doing, it's, I'm just trading and whatever I see. That's just more times than not, that's just a lack of education and a lack of experience speaking. And that's their cover up, or their excuse for not knowing, or, it's because they just don't, they're just like, sometimes ignorance is bliss. This is a good way to put it, right? All right. But, longer you've been around the markets, the longer you understand what's moving the markets, and then you tend to have a bias on directional bias on whatever you're doing, right? Okay. Anyway, let's and Ziggy asked for a rant today. He asked for a rant, and I'm like, I can't pull a rant out of my ass, but maybe I can. Maybe I just did. Maybe you just got a rant on trading both directions and you didn't even know it. And Rick said that was a rant. See, maybe it was. Anyway, we do have, I got to get back to the charts though. We're going to have support on the dollar Mexican peso down here at 18.95. I wrote yesterday 19 in the figure, but just keep in mind that this is a really big. Did I have a 1 second chart? That was totally by accident. 1 minute is what I wanted. Okay. The daily chart in the dollar mex, we're right here at pretty key support. So any dip down to 1896 ish. I mean, I put 19 yesterday. I can probably just put 19 again. I think people are buying it around the 19 figure. But resistance is still going to be what I put down yesterday, is 19. I think I put down 1913 yesterday. And you know what we did? I think that's the number I put down yesterday. And we actually reversed from 1913 yesterday. Almost to the pip.
Clean it up and get it to the pip.
Yeah, I think we did it almost to the we were within just a couple of pips of it. I don't think we got all the way up there. Or maybe I wrote 1912. But anyway, yeah, we hit that trend line first. Yeah. Well, unfortunately, I got out before then. I got out like 1909 or something. So I got out ahead of the figure. So anyway, all right, let's go back to these Nordic currencies, and then we're going to bring Paul in here in a few minutes. So the US dollar, Norwegian krona, I don't know what is fueling the strength of this thing. I mean, it is just strong. We are testing the 88% retracement. We're going to come up to really key resistance here. And I have to admit, man, if this thing breaks, I mean, it's going to be a pretty bullish breakout here. If we might come in, testing this 9 level. And the US dollar, Norwegian krona, if you've never traded it, this thing can move. When it decides it wants to move, it can move. So I'm going to write down 882 is 882 is key resistance. Yesterday we might have wrote down 880, but we have to kind of look at an exaggerated number, especially today on the FOMC. Now support on dips should be right here. Was the old 618. It was the spike high, spike low held.
Moving average coming in there.
Yeah, you got a little 4-hour, 50-period moving average coming in there. Yeah, so I mean, 868 is going to offer some support today if we get all the way down there. 68. We are still in a range. As much as I want to put bullish, we are just at the upper end of the range, just like a lot of these things, Let's go take a look at the Swedish krona. Benedict from the chat room, he played this thing on the long side. He's been playing it like a champion. Now, I think he's looking at some sort of harmonic pattern here, which, believe it or not, that's 50. If we went to a 618, which would be like roughly right around here, 786, and the 70. I mean, that's a Gartley setup. I know we that would be an actual Gartley pattern. We're off the B point a little bit, but still you can see, if it's going to turn lower, this is probably the place it's going to turn lower. At this, I'll write down, 960. Just to write it down. But
ate a lot of beans last night, Blake, and that harmonic turned into a fartley.
You're so funny, man. I tell you, you're from the Midwest, aren't you?
Yeah, Chicago's in the Midwest.
Yes, dry humor is prevalent in the Midwest.
Yeah, well,
it really is. It's really a Midwest thing.
Oh, I don't.
You guys have the corniest jokes.
Yeah, well, that's where I learned them, in the cornfield.
Yeah, my dad is very corny like you, so
or Dr. Schultz. I have a lot of corns.
It was always the embarrassing, like I'd be like dad in front of my friends because so
yeah.
Corny.
Well, you got
you
have some genetics in there for you to be a little Midwestern.
I try to shake that stuff off. Support for the US dollar, Swedish krona. It's tough to say. I guess we could just mark up this number here, but which, I mean, if we get a move all the way down to 950, might be some support. But I'm this one's not as readable as some of the other currencies out there, in my opinion, as far from a support level. So this is your bias chart. That's how I see things right at this moment. And just remember, we're in a pretty bearish trend with the cable, but just because the bearish, and let's talk about this for just a minute before Paul Franco gets here. When you see these biases here, the bias is more of the trend bias on what direction the market's going. I trade counter trend, and I would be completely lying if I told you that if looking at the pound dollar and it says bearish trend, that you won't catch me buying it here and there. I totally would. Depends on what my charts are saying and depends what the rest of the market's doing. But knowing this, if I decide to go long the pound and I know it's got a bearish bias, what does that tell me to do?
Trade it like smaller position and lower expectation.
Exactly. So That's exactly it. This is your experience speaking, Dale. Is if I know it's in a bearish trend, if I trade the cable on the long side, I'm going to just take smaller positions, and I'm going to, have very low expectations as far as where it's going to go. I know that rallies will be very limited. So that's what these biases tell you. It doesn't mean that, it's the pound has got a bearish bias, let's just short it because we're going to make money if it goes, because it's going to go down. That's not necessarily true. A bias should help you with how you're going to position risk when you're trading that currency pair. I do trade counter trend. And like I said, I am a good directional trader. I'm not a good bi-directional trader, but that doesn't mean that I can't trade counter trend. I might be, the pound may be in a bearish trend, but I might be targeting longs at a certain level because of some reason that says, hey man, as long as every dip down to 120, we hold it, I'm going to get long down at 120. I know it's counter trend, but I'm going to do it. That could be my stance, and which is also going to prevent me from shorting the pound down at these levels. I'll probably just be buying the cable at 120, just using smaller position sizes while I'm doing it. And I'm just using that as an example. And I actually am not feeling that way. I'm just trying to give you an example, but hopefully that helps, guys. And hopefully you enjoyed getting the bias chart and understanding how I find these support resistance levels. Remember,
good stuff, Blake.
Thank you very much. And remember, if you are not happy with your current broker, or you just want to see what other alternatives are, make sure you click on Forest Park FX, or check them out. They are a webinar sponsor. Tell them that you came from us, or click through our link on our website, because that does help us out. It tells people that, hey, Blake and team are talking about us. They're pointing people in our direction, and they will help you find a broker that is best suited for your needs. But I want to let Paulie come on. He's got a few minutes. Paul Franco, are you here?
Yes, Blake, I'm here.
Hey, what's going on?
Amir made me laugh. He goes, because he was still going. We're coming up at the top of the hour, and he goes, "Well, so much for Paulie to say something."
Mm-hmm. Yeah, because I just keep talking and talking and talking. All right, I'm the new Steve. I got it. All right.
No
So
one is.
I actually stopped sharing. Paul, you're going to have to take over the screens. Guys, I will see you tomorrow.
All right, buddy.
Good luck at the FOMC. Yeah, thanks, Dale.
Okay,
Hey, Blake.
kill him, man.
Yeah.
Blake? Yeah, I was going to say something. You've been talking about the dollar yen, and I guess hopefully you all can see my screen.
Yes.
And we talked about that potentially moving higher, but the concern for risk, risk off. And one of the things that, in the webinar, we always cover a little bit of news for the flavor. And along with that dollar yen, I was just going to let you know, you probably already know that, but just to hit on that, you can see here the Euro Stock 600 was down 1.5% yesterday with its worst day since May. So kind of plays into that. Remember, maybe the dollar yen's going to have a hard time trying to get up there because it really has that risk off pull, yanking, for a move into the yen. But just thought I'd mention that the Euro Stock 600 was down 1.5% yesterday with its worst day since May. So, I mean, obviously,
the Asian averages, like the Nikkei was down. I think the Kosdaq was down. So I think, some of these Asian stocks, at least they were when I went to bed last night. I didn't check them this morning.
Yeah, we're the last man standing in indices.
Exactly. So, I mean, the dollar yen, I mean, the upside is going to be rather limited. But anyway, just to give some thoughts about the FOMC. We covered it extensively on the European crossover webinar, which we do at 4 a.m. Eastern time every day. It goes on for about an hour, sometimes a little bit less, every once in a while a little bit more. And if you're not available, Stelios records that, makes that available in the chat room about an hour and a half before the U.S. Open. They do post it a little bit later on, but I think it comes around out at like 9 o'clock in the morning, Central Standard Time, or where everyone can go in and view it. But we did have some takes on the FOMC, and we were talking about the levels. And we were saying this is the one time I don't think that the levels are as important as, kind of like I'm going by what you said, Dale. It's really, to me, going to be what comes afterwards. And when we were talking about the levels today, I was saying, hey, look, don't worry about the levels. the levels will take care of themselves. They're basically going to be mile markers on the, on the road. My thought meaning that I think that when they do cut, if they do take that position, and we'll go with the most expected outcome, and then we'll reference what Blake was saying about 50 basis point. Look, if you look at the dollar index here, and we'll bring it up on the daily, and I'll basically kind of preface.
Oh, and Paulie, don't worry about the time. Our guest canceled today, so you can run over and for whatever it takes for you to complete your thing.
So one of the things that I was talking to one of the guys in the chat room yesterday in Asian, and I want to say thank you to Blake. I did jump on with him with the Australian dollar long yesterday, and actually jumped out of half of the position right when they came out with the CPI. Got a nice little quick little game. Came close to getting stopped out, so I thought that was going to happen, and they did go on and jump up, and then I dumped the second half of it when I woke up this morning for the European crossover webinar. But here's the deal. I was talking to one of the guys, Beersman, in the chat room in the Asia session. He was mentioning about, what do you think is going to happen with this? What's your take on the FOMC? And, I think that I'm not going to have a set take. I'm going to let like we talked about 2 days ago, let the market do the work. But that being said, we're talking about going to, if it were to go to new highs, and he was saying, hey, look, well, that's really going to push things higher. And I was talking about, here we are, the highs are 98.37. So we're just really a little bit more than a spit away from 98.37. It won't take much to get there. And on top of that, the market's looking for a 25 basis point cut. So a lot of people are thinking, hey, look, you can't, it's like the beach ball analogy that Blake used to talk about. You just can't hold this dollar down. It's going to go higher. Everybody else is in bad shape, blah, blah, blah. So my thoughts is we get that 25 basis point. You're going to see that knee-jerk reaction. And my guess is we'll easily take out that 98.37. But what we're looking at, here's the level that I'm looking at for me is going to be 98.71. So I'm thinking that we could easily take out that 98.37. Right now, we're only 34 ticks away. But to me, the key is going to be the comments afterwards. You can see if you got a news feed or whatever, you'll see it maybe on Twitter, all the different, what the Fed's going to be saying, but of course we'll have the conference. My thought being is that the key thing is going to be, at least to me, and what I'll be focused on, I'm not going to try and jump in there. If someone wanted to jump in, I think you can chase it to hit the stops above 98.37. I think it'll obviously kick some people that are short out and kick some people long. And that's where I think will be the concern. Now, I think that if Powell comes in, and I think legitimately he can say, reference, hey, look, the concerns are, the global risks that it could be impacted with the U.S. economy, looking forward. And I think that if it had been 4 months ago, not a big deal. But the global economy continues to weaken. We saw some data come out of Europe that came in still a little bit weaker inflation-wise. And like I said, this whole thing with China, they've been crying that Trump's been singing that song and crying that wolf about things are going to get done. And then, yesterday he's like, oh, they don't want to get the deal done. Look, that song's been playing on the jukebox since Moses crossed the desert. So I'm tired of hearing this. And I've been saying that for months. They're not going to get this China deal done. Okay. So, eventually, maybe someday when we're all dead in the ground, maybe they'll have the deal. And that's a bit of an exaggeration. But I'm saying is the risks keep mounting. That's what I'm talking about. The risks keep mounting. And so my take is, if Powell stresses more on that, and my thought is, and I think it's key to look at this way, I don't think he's going to lay the groundwork. And I think that's important. Lay the groundwork for future cuts. But I think he will potentially open the door for future cuts. And so depending on the amount of comment or references that he makes to that potential risk of, slowing down, or the lack of inflation and the impact that we're seeing globally, I think at that point, let's say that on the knee-jerk reaction, we take out 98.37, which is what I prefer to see. 98.37, maybe we're just below 98.71, and he starts emphasizing that, or you see more emphasis towards concerns about that and not laying the groundwork for future cuts, but open the door for the possibility for future cuts. I think then the market may get a little bit worried. I'm talking about from the currency side, and you could see the dollar disappoint. Now, I don't think the dollar is going to sell off dramatically or anything like that. But when we looked at our bias chart this morning, the way we looked at it, we said look, where's a number where if people got long, they got, got tripped into their longs above 98.37. Yeah, you can't hold the dollar. We're going to 99. And then after that, we're going to par. If we do see that disappointment and they're pressing him and then Powell saying, hey, look, those are the concerns. And the market starts to look at that and say, wait a minute, this isn't just this cut. It's going to be one cut and obviously another cut, which would be three cuts, which they've been priced in anyways, as opposed to this one and done type thing. Then what happens? Where's the level where traders that got long here or stopped out and want to re-engage, where they would say, you know what? I'm back in it. I think to me would be right here at 97.64. 97.64. So the way I'm looking at it, and I was telling the folks in the chat room, this one had, I'm not so focused on other than some levels. And I said, to me, they're just mile markers for today. I don't think, like you and I talked about, let the market do the work. Don't try and play hero. Definitely not on a day like today. To me, it's the most important day of the year. It really is. I mean, the way it's set up. I mean, it seems like every FOMC is the most important, but this one really sets the the tone, I think, for the going out. Does the S&Ps, can they go to new highs, or if Blake was mentioning about the 50 basis point, if we saw something like that, one and done, it's going to still spook the market. We'd still see a rally in S&Ps. But I think eventually it just run out of gas and they might say, what are they seeing that we're not seeing? Because why would you give a 50 basis point cut? So my thought being, once again, is, well, if they come up here and if you wanted to, you could play that. If you saw that, you're quick enough on the draw, you see the 25 basis point blurb on the screen, you could hit, you could hit the buy button for the dollar and you can run so that they can go in and take out this high here at 98.37. That'll trip a lot of shorts out, get some people long. But if you, what I'm talking about, if you see that, and then Powell's focusing more and more legitimately so about the potential slowness and the impact to the U.S. economy. Don't forget, now we have Boris Johnson. And look, the pound's fallen like I'll go and say here, let's take a look at the pound. Reminds me of a Texas saying here, if you look at this pound, this thing has fallen, and this is just on a 2-hour chart, but this thing has fallen like a turd in a well. I mean, over the last few days, and it continues to, and there's nothing to suggest that it's going to, I mean, we're kind of holding here in this area, but with Boris Johnson dead set on the, them rolling out of the EU on October 31st, it really opens the door for this to weaken. And now the BOE, which is looking to potentially raise, will look possibly to potentially to cut. But still, this just brings on more and more slowness. We've seen data coming out of Germany, the engine of the EU continue to be weak. Every now and then you see one or two reports that come in, at least they hold their own. But for the most part, it's just been one low after another, like low since 2012 when you're seeing this German data. So if Powell gives more resonance towards the impact, and I think in this case would be legitimate, it opens the door for those future cuts, and I think that's what would disappoint the dollar. I don't think the dollar is going to sell off hardcore, but anybody that gets stuck above, where would they be? Where would they end up saying, well, these are my stops. I got to get out. To me, it's 97.64. Where is it going to be where some people say, hey, if it gets below that level, I don't mind taking a short, and I'll just put my stops above, whatever, 98.20. 97.64. So that's how that we're looking at it. Getting back to the dollar yen, you and I were talking about that. I thought the market could move higher. The bias chart resistance several days ago was 891. We got to 895. We had a gravestone doji on the 2-hour chart, and we saw a pullback. I still thought that we could potentially go to 927, but right now the reason I reference that Euro Stock 600 is, wow, this dollar yen is probably holding up relatively well, considering how everything else reminds me of that little cartoon with the dog and everything in the whole house is burning down. Well, that might be a little bit of a dramatic analogy. But that being said, you're right. We're the only bourse that's actually moving higher. So the dollar yen is probably so far at this point probably doing okay holding here, because if we do see a disappointment, like we talked about, this thing could really start to go on and slide in its own. And like I said, because you're seeing bourses across the globe continue to weaken despite, the stimulus that we're looking at. We got bunds here, and the bunds are still, up here, in these highs. Look at that. Look at these bunds. I mean, they're just literally less than half a spit away from new all-time highs, obviously new lows in, in bond rates. So you're getting all the stimulus you can, and all these bourses are just starting to slide back. So that really sets something. And I don't like to look out longer
Great point.
term, but it does open the door like, hey, you know what? Do I see something on the horizon? Just so that you'll be aware. But today it's all about, the FOMC, but that's my take. I'm not going to spend any more time here on the dollar CAD. We do have our bias chart support at 31.20. That worked out really well over the last week. We had 20 in the low on the pullback of our scalp short at 31.62, ended up being 31.22, and then we rallied up, and then we retested that. I think it's going to be 31.20, but obviously, like I said, we're going to see what happens, with the FOMC. But to me, it's not so much about the levels. Is I think what you want to do is, and my take on that is, you don't have to worry to a certain extent about the levels. Let the market and the FOMC, let them tell you, because Blake made a good point a couple of days ago, or maybe it was yesterday. He said, I really don't have a position. I'm just going to go whichever way it's going to go in and break. And I think that's important, because I think this Fed's going to set the direction in the dollar overall for the next couple of months, depending on how it goes. Now, I don't think I think what could happen with the dollars, we do disappoint, and then we start to see a good little sell-off, and then we go back to the same old thing. We're dilly-dallying around, over the course of what we've been doing. It just be dilly-dallying around at a lower level. But that being said, the market will let you go on and make that determination. I've been in situations where it was key FOMCs, and I've jumped in and jumped out, and then I find that the move that finishes at the end of the day is a move that goes on for the next several days. So this one is a very important FOMC, because
good mentoring.
Yeah, because of how they're setting it up, and is it a one and done? Is there potential? And I think that Powell, we always cover a little bit of news, a couple of stories before, just to get a flavor for the day. And one gentleman out of Japan was saying, I think he was with Daiwa Securities. But anyway, he was stating is if Powell's vague in his responses, then, the dollar's just going to keep on going. But I don't think he's necessarily going to be vague. I don't think he's going to be, laying the groundwork, which some people probably see it on a bit of more of extreme, or like he won't do that, the groundwork for the cuts. No, all he has to do is open the door for further cuts when he, stresses, or what you call it, enunciates, even though that's verbally speaking. But anyway, stresses on the potential, and I think it would be legitimate. The impact of this global slowdown, although we're not seeing it, it can potentially weaken us. The market may not move at that moment, but then people are going to start to scratch their heads and go, well, you know what? This means definitely a 25 basis point cut in the fall, and we'll probably see another 25 basis point cut, because is there anything that's going to change? Probably not. Is there anything that could get worse? Yeah, Boris Johnson's over there saying, oh, no, we're getting out. Remember his phrase, do or die. So this is definitely going to slow things down. It's impacting Europe, per se. The whole China thing, that still hasn't come around at all. And like I said, I've been saying it for several months. My mom would say it sound like a broken record, but I've been saying there's not going to get no deal. People keep falling for this thing. It's the same thing where they're talking about the Australian dollar when it was up there at over 70 cents, and saying, oh, well, if they say it, it's going to be this big old rally. We're not getting no rally, folks. Wake up. That's not going to go on and happen. Now, eventually, someday, like I said, when we're all dead in the ground, we'll probably get a deal with China. But there's not, once again, it's just another thing to weigh on the scale of potential negative outcomes.
The fundamental, Paulie, of Europe being weaker than us is 33% of their GDP is export related, while here in the U.S. it's 11%. So the trade war, or whatever you want to call it, is having a larger impact on the rest of the globe, because we're not as dependent on exports as Europe. And Germany is the most heavily dependent on export in the EU.
Yeah, exactly. So once again,
in fact, I think they exported something to you that's coming within a week or so that originally was manufactured in Germany. Is that true?
Yeah.
Let's see a picture.
Yeah, I will.
You don't want to brag. Okay.
Yeah, no.
All right, buddy.
But I mean,
anyway, you're trying to help their GDP a little bit, but That's the reason, and I remember years ago, a guy named Martin Armstrong. You ever hear of him?
No.
Okay. Anyway, he does things with pi and everything. And his scenario was going into the next recession, whatever adjective you want to use, that the sequence was first Europe, then Japan, and then us. So we're the, that analogy everyone's sick of hearing. We're the cleanest dirty shirt on the clothesline.
Yeah, and like I said, and that is correct. And like I said, I'm not trying to make some forecast for this gloom and doom or whatever. To me, it's all about us getting a trend that'll last for on a very short term basis for
How about a few days? A few days would be
to probably a couple of months, and that's what I'm saying. So,
okay.
What I'm looking at, to me, it's going to be more important as to. Most of the market's looking for 25 basis point. Okay, let's get the 25 basis point. Let's look what the text says, and let's look what Powell says, and that's going to give you the direction. You don't have to figure it out like we talked about. Kind of let the market figure it out for you, because the move that's going to happen, either we're going to blow doors on this dollar index, and you don't have to be the first one in. It reminds me of Art Cashin's saying, second mouse gets the cheese. So you're not getting, if we
like that
98.37 and we're still holding up and above 98.71 towards the end of the day, you already know where the dollar index is going. It's going to go well beyond 99 and maybe go to par. And once again, when it gets up here, and if we gun these stops at 98.37, sit back, see how the text goes, see what Powell's saying. If he's stressing more about this, the concerns for this global growth more than just simple lip service, and you're seeing the dollar index start to falter, okay, you can set your risk. And then once again, if we start sliding back, to me, it's all about 97.64. Then anybody that's long will have said, I got to get out. I got trapped. Anybody that was short says, man, I just got screwed out. I stopped out too early. I'm getting back on my shorts. And then we would see a move come down. Wheels off the bus? No, but an extended move for the next few days, for the next week or so, and then maybe leading for the next month, a couple of months. Yeah, and that's the way that I'm looking at it. So why I said was, to me, the levels aren't going to be as important. They're just going to be today mile markers on the road and the direction that we'll be going, because I think the Fed will set the determination for the next, not only a very short-term basis week, but for the next 2 months. But that's all I got. But thanks
Paul Franco says, let the market close to tell you.
Yeah, there you go. Because like I said, even if you wait to the close, you're not going to do wrong. I mean, if we close it at 98.85, we already know where the dollar index is going. No one's going to stand in the way. And then anybody that was short, they're gone. You see what I'm saying? So same thing as if we disappoint, we get it. What I'm looking for is a move above 98.37 on the knee jerk. Then the level above is 98.71. You can see it here. Then I want to see what the market does. And then if Powell starts giving those clues and you're saying, wow, I think the market is going to say, to me, the way I look at it, it's not outsmarting the market. I think if he starts not laying the groundwork aggressively, but opening the door for possibility for future rate cuts, the way I look at it, the market's going to go and say, you know what, it's the old West. You're going to shoot first and ask questions later. And then that's where, technically speaking, you could see the market start to weaken. You set your stops above and let it play out for you. Or if you want to wait till the end of the day, like the gentleman said, after the close, hey, once again, we'll get the move should go in and last, for a good week, and then the extended move over the course of the couple of months. But that's all I got. But thanks for joining me here. Sorry about blabbing so much on this, but to me, I thought it was more important to take
great
on
content and mentoring, Paulie. And you could catch Paulie in the chat room for the Fed with Blake and the rest of the crew. So today would be a good day to join, so you're there for the Fed action with the pros. Surround yourself with traders better than you. That's what I did when I joined ForexAnalytix. So thanks again, Paulie.
Okay.
Everyone, good hunting today. Remember, don't just count your pips, count your blessings, and we'll see you all tomorrow or in the chat room for the Fed. Adios.